Good morning, good afternoon, good evening. Welcome back to our YouTube channel. This is Silver Trading. If you're coming across our video for the first time, kindly take a minute and subscribe. Yes, today I saw a text of somebody is really stranded with this strategy. One of the basic things that we need to know when you are trading Forex is you should be able, it is either you are trading candlesticks, which is price action, or we are using the trend. So I will go into price action later, but I would like us to look at the structure of the market, how to draw until you will reach a point where you are able to predict with precision the next direction of the market based on the structure of the market. The structure of the market is a very key thing. We call it the king of the market. So when you're doing your analysis, there are some things that we have to have in mind. First, you must start analysis from top going to bottom. That is how we usually do analysis. You start from higher time frame going to lower time frame. So that one will depend with which kind of trade you are doing. If you are a scalper, then you can start from 1 day 4-hour chart up to 15. If you are a swing trader like me, I usually start with monthly. That is why you see at this level I'm on a monthly chart. So this one is Euro USD. I want to use it as an example to help you how to draw the structure up to the lowest level where you will be able to enter the market. So we are going to go slowly. There is no hurry. So if you are okay, you'll follow me. So first, the way I've said, we'll go to our, this is trading view. We'll go to our monthly chart. So this is our monthly chart. There are two things that usually happens with the market. Market has two sections. We have the impulse. We have the impulse section, and we have correction. So an impulse usually most of times do not form a congruent structure, but correction helps us to identify the impulse. So like in this section, I want to show you where we have those two. So in this section, this one is called an impulse. But on this other section, this one is called correction. When you look at correction, it has some patterns. But impulse, even if it is in life, if somebody has an impulse, is excited, so you can never tell the structure that's going to form there. So those are two. This one is called impulse, while this one is correction. I hope it is noted. So now we want to have have structures on impulse, not impulse, on correction. Then it will be able to predict the next impulse. So one thing on a monthly chart or a higher time frame, you identify the correction part of the market and the impulse. So we've identified the impulse and the correction. So at this time part of the market, we are in a correction zone of the market. So we want to draw the structure. So this one on a monthly chart, this one is just to give you a rough estimation where the direction of the market is going to. So let us have our drawing tools. So when we look at this, our market, just a minute, we'll just make it come out clearly. So we'll just draw these arrows, this corrective part of the market. Just want to have some structures nicely like that, so touching those sections of the market. There's some information I will show you as we progress. So that one is one section up, lower section. Now we need to draw also an upper section. So just bear with me, you just have to be patient. Remember, market usually have some touches. So these two corrective paths are supposed to be a bit parallel, and they are supposed to touch the extremes of the market. So that way. So this is the corrective part of the market. So we now see the impulse has no structure. You can never extrapolate the impulse, but now we've extrapolated the corrective part of the market. So now we want to narrow into this section up to the current price of the market. What we have to know, market usually have some touches, 3 touches. So like in this part, this was the first touch. On the lower section, we have a first touch, and then we have the second touch. So we still expect another touch, then we'll break down the third touch, then we'll come back up. So as in corrective part, we usually have 3 touches. So that one should be noted. So now we'll go to a lower time frame. So from monthly we'll go to weekly, because I'm doing a swing trade. I love swing trades because of my schedule of other duties. So now when we come to this section, now we can see. So being that I'm doing a swing trade, I will still be able to extrapolate the highest point. Like now in this market, we are seeing the impulse and the corrective pattern that I showed you. But now I want to mark the highest and the lowest point, which also the highest and the lowest point, you can do it on a daily chart and also on a weekly chart. So let us have our horizontal ray. So I want to move it. Yeah. So at that section, so I want to remove one. I want to remove this one. And then this one at the peak. So we made that one there. So we have it there. And then now I need another one at the lowest section of the market, which is somewhere there. No. So yeah. So that one. So we are okay. If at all you are doing a daily chart, you are a scalper, you could have used this highest level around somewhere there. You could have placed it somewhere there. So there is no problem. So after that one, let me just remove this one. So I want to narrow to this other correction, because now in this section you are able to see so let me use, so this one, this section up to here, that one is an impulse, while this one, that part is correction. So we usually have impulse, correction. Fine. So we want to narrow in that corrective part. So we'll just go to trend again, and then we'll just pick it. Where have we lost it again? What is really not happening? Life really calls for patience. That way, fine. And then this one again. Roughly somewhere there. so don't worry. This thing usually calls for a lot of patience. Yeah, at least there should be some touchings. So now we have it. So we have our correction and impulse. Now you are seeing things are taking shape very well. So I told you, in correction we must have 3 touches on both sides. So let me now show you here. It is a bit clear. So this is the first touch on upper section. This is the second touch. On lower section, this is our first touch. This is our second touch. So because we are supposed to have 3 touches, this market is supposed to move from this section to that section. Then it will come to break down. Why am I saying that? Ascending triangle. So when you have ascending triangle, then you are supposed to have an impulse. So we had an impulse, and then this one forms the correction. Then we'll have another again impulse. I hope I've left nobody behind. That is how market is usually traded. So from our drawing, you can roughly start to figure out that now we know where we are going to. We know where we are going to. So fine. So after that, now we have to come to this our time frame. We move to our another lower time frame, which now is going to be daily chart. Let me minimize some things here. They are not that important to us such. Now let us go. Sorry for that. So that one is our daily chart. So on this our daily chart, now we have to identify the highest point and the lowest point based on the current price. So those are very significant levels, or we call them support and resistance levels. So now we are inside this corrective channel. Now we have to identify the highest point, or the roof and the bottom of the price, support or resistance sections of the market, or the regions of liquidity. Now, so we'll pick our triangle, and then so we'll have our highest point, which is somewhere there. you see the way that highest point was honored. The market came, it couldn't break it, it came back, came again up to this section, then it came back. It means it is strong. So the market came, now we expect it to break. But before we break it, we have to know also the lowest point. So we have to draw these structures until we corner the price completely. So another lowest point, or the bottom of this market, was somewhere here. Let us just make that one like that. So that was another region. So those are the regions where we expect the market to play. But being now we are in a corrective market, this level is very, very, very strong. It has not been broken. So it means this market is really obeying that level of ascending rectangle. So let us now narrow to the price. So when you want to narrow to the price section, where the price of the market is, you have to go to a lower time frame. So let us go to a lower time frame. So to go to a lower time frame, we still have to come to our daily chart. So daily chart, now we'll go to our 4-hour chart. So now 4-hour chart, we'll now corner the price again and have a resistance. Draw a resistance. That is a very small resistance within that section. So now we can clearly see our market. It came, it bounced. So if you narrow down, you are able to see something. That on this section, this was the correction of the market. Then we had an impulse. So we expect correction again. Is it clear? What we are saying, if you look at the formation of this market, we can still narrow down. Let me draw this trend. Where that our trend line was broken, and then it came down. So this other section was correction, and then we had an impulse, but that is not our interest. Now we've narrowed to a 4-hour chart. So now on this our 4-hour chart, now we can see how things are happening. So if we go to our 1-hour chart of that section, we can see this part was very strong. It formed a very strong support. Of the market. This is how you narrow down. To the section of the market that you really desire. So if at all one was entering this market, one could have entered somewhere here. Sorry, it is terrible. Your stop loss at that section. Then you move. Let us go to 4-hour chart. So that one was going to be your first takeaway profit will be at that level. The other one for swing traders, for swing traders, now we'll come back to our daily. To that level, you see. So for swing traders, that is where we'll take off we'll have our second take profit. The first one will be at this level 1.12. Let me show you. So the first take profit, we are going to have it some there. Second take profit, does it draw it clearly? The first take profit is going to be 1.12024. Second is going to be at that level 1.21670. This is how you're supposed to work on this market. This is how you're supposed to narrow down on this market. So I think so far having this market is people should not have difficulty in tackling this one. What I love with swing trading, you're able to tell the direction of the market. Remember, risk management is also very important. Risk management is very, very key. So this is how we are doing our trades. So if we expand it, so we are able to tell the candlestick. Let me show you. You see this candlestick? That is called bullish engulfing candlestick. It was showing a complete change in the direction of the market. Then on this other end, I don't know how to point it. Let me expand it. There are two candlesticks that are very important here. This one is called bullish engulfing also, and then again also we formed inverted hammer. So that one tells you that this market, that there was liquidity here and people rejected the price lower than that section. So trading is not that difficult. Just take your time, learn very well. You can see even the area that I've placed our stop loss. It is really very, very, very safe. But I still expect this market to come back to do some correction before we move. So if you compare the ratio of what you are going to earn from this market compared to stop loss, then it is worth it. The issue you need to have, for you to trade well, you need to have a big account. then you'll for sure, I want you not to keep on referring to this. You can save it on your chart. This one is trading view. Yes, save it. Let us check. Even after 2 months, by December, if at all it will have formed the way I've told you, then you'll be sure that trading is not that much difficult. Trading is not that much difficult. So that is how we usually do trades. Ensure you know ensure you know one. I've said analysis of the market. We start from the top. Top can mean you can start from weekly chart or monthly chart. It depends with the objectives you want to achieve. If you are a scalper, you don't need to go to weekly chart. A scalper, you just check the daily chart. You start with the daily chart, should be your highest time frame. Then you come down to 4-hour chart. From 4-hour chart, you come to 1-hour chart. Then you do your entries at 15 minutes. At 15 minutes. There are so many things. When you know how to trade, you can see so many things that are really occurring in the market. This one is AM. There are some people who love trading M. So you see, we came, then you just enter a very safe zone. At that section entry, your stop loss somewhere there. You take that section. Let me show you today a safe section. Safe short. So you could have entered. There. Very, 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 very safe. Very, 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 very safe. This is where I usually call safe zone. See this level. There was some rejection here. That safe section, there is no day a market will ever reverse when you enter to that level, this level. No day. That is a M. So even this one of ours is a W. When you come to a lower section, you see, let us go 1 hour chart. I am formed. So trading is not that difficult. If at all you still have some difficulty, you can still reach me or drop a comment where you need some assistance. Then I will be able to show you. Sometimes I usually say, is it really worth it charging people this thing? I don't know. Let me not interfere with other people's businesses. But just take time. Just take time. You may not draw this structure once the way I've done it. I've done it based on the experience. So also just take a pair, try to analyze that pair. The pairs that have good structures are Euro, USD, GBP, USD. And those ones have good structures. So just try these other structures I've told you. As well a cap. For you to have these drawings, you start with higher time frame. So we started with our higher time frame, which was monthly. You can see. I said one thing you have to know. Be able to identify, be able to know some things in this market. Impulse and correction sections. I said impulse section has no structure. It is so difficult to draw structure, but impulse is followed by correction, then impulse again. So this, our drawing, we've done it on a correction section of the market. That one is on a higher time frame, which is a monthly chart, where we've done it. So you need to have two parallel lines, either ascending or descending, depending with which market you're analyzing. Then from there, from monthly, you go to your weekly chart. So on your weekly chart also, you are still able to draw, to identify the impulse and the correction. Like now I identified, in this part I was able to identify the impulse, which I said the impulse is this section. Then our correction is this part. Where we are correcting this market, where there is a correction in this market. But also we noted that in correction, the correction part of the market usually is supposed to have 3 touches on each section. Like in this one, our first touch was here on upper part. Our second touch is there. So this other one, on the lower section, our first touch was here, then second touch was here. But we are supposed to have how many touches? 3 touches on every section. So which means now the next touch is supposed to be somewhere there. But how do we identify this section? One, you go back to the impulse and not identify the highest point of the impulse, which you were able to identify as this point. That is why I now drew this line. That was the highest point, and the lowest point is somewhere down here. So the market is supposed to play in between those two sections. So from there, then let me use that one. Then this market is this market is supposed to move down. That is how that market is supposed to be. So we are supposed to move to that lower section of the market. That is one thing that we must get it correctly. So I hope that one is fine. So after that, then we are supposed to move to a lower time frame again. So this lower time frame, which is now a daily is supposed to help us to know the highest point and the lowest point, or support and resistance areas. So which has now assisted us to identify this resistance section, and then this one is support. But one thing we have to note, we are supposed to really narrow down to the section where we have the prices. We have the current price. So it means we still have to move to a lower level, which is a lower time frame. So our lower time frame is here now. So in this lower time frame also, we still have to identify the highest point or the support and resistance or the liquidity zones based on the term that you love. So in this section we said so this one became our support or a liquidity zone, and then this one still forms that one still forms our resistance. So after you've been able to reach that lowest point, the next issue now will be to identify now the entries, because entry is also very important. But when you look at this region, you are able to tell that the price was rejected at this lower section. So if we go to our week, now we from 4 hour, we can go to our 1 hour chart. On our 1 hour chart, you need to be able to know the reaccumulation zone. So the reaccumulation zone is at this point. I usually have it as a box, so anytime it breaks out, I'm able to tell. So you see, let me give it a different color now. Sorry, different color, different weight. So anytime it breaks out, that point where it breaks, that one becomes our entry. That zone is very safe, my friends. That zone is very, 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 very safe. What has our market formed? Our market has our price has formed a W. You see, it came, then it broke. So this section, I call it safe entry, safe entry zone. Immediately it breaks out of reaccumulation. My friend, we are now very safe. Where we've done our entry, that place is very, very safe. Apart from that, I said, if you're a swing trader, there are different levels of take profit. The first one will be the next highest point. Our next highest point of the market is at this section. So that you will form your part of your first take profit. If you are doing a swing trade, which we expect it will last for long, up to probably next year, January, then your second take profit, this was the first one, your second take profit will be here. Why is it there? I said, let us go to weekly. This was the highest point of correction. You see, first take profit, your second take profit there. Because we said we are supposed to have first touch, second, then we expect the third one there. My friends, I hope this is going to be one of the best classes ever. I've offered free of charge. Take your time, go through this video and try to learn. You'll find this thing is so easy. It's so easy. If there's some still other issues, just drop down the comment. I will go through them. I usually go read them. Then we'll be able to tackle the next level. So the person who requested this, I hope I'm now clear. I think I've tried to break it down in a very, very, very easy way. So guys, now we are targeting 2,000 subscribers. So help me fulfill that journey. I'll be offering this content free of charge. If you are able to go through this, if you're able to have these structures, then now you see when you use indicators, you know what you are doing. Indicators are just it's supposed to give you quick visibility of the market. When you know this, you are good to go, my friends. I know God willing we'll do price action. Also, that nobody is supposed to lag behind. Nobody is supposed to lag behind. So thank you so much. I just request you, if you are meeting us for the first time, just take a minute, subscribe to our YouTube channel, drop a comment where you have some difficulty. Let us grow together. Forex industry is so big. It's very, very, very big. I cannot eat it alone. And very few people are interested in Forex. So kindly take a minute, subscribe to our channel, drop a comment. If there's a section that you still think you have some difficulty, just highlight it. I know I'll get time and go through it, and we'll help each other to move forward. Let us grow together. Thank you so much, and I appreciate this far we've walked together. Just remember to subscribe and comment. Drop a comment. That one will be so important. So market structure is king. So thank you so much. Have a blessed day. Let us meet again.